Good day, good people. Today we're going to be talking about the types of entries there are in the forex market, and essentially there are only two types of entries. The first is the high risk entry. The second is the low risk entry or the reduced risk entry. The difference between the two is volatility and none other than probability. So in this video we're going to be getting into the examples, the difference between the two, where and when to enter, and everything else in between. So stay tuned.
Those that made it.
Right, so as we said, we have two types of entries in the forex market. The first is the high risk entry, as you see, and the low risk entry. Now the difference between the two is when you enter a market, when the direction is not yet confirmed, and the low risk entry is when you enter when the market has now really confirmed and the market is moving impulsively and so on and so forth. So as we see in this diagram, we have a one touch, second touch, third touch, and on the third touch, if you remember in my previous videos, I have a video where I speak about the multi-touch confirmation, and I said 3 touches or more, or rather the third touch of a structure is a high probability setup. And if we see a nameable pattern on the third touch, that's a fantastic trade to take. And those, when you enter on the third touch, those are the high risk, because yes, it is a high probability setup, but there's no denying the fact that there is a possibility of an extension, a pattern within pattern. Instead of going down immediately, the market can maybe, consolidate and build some sort of a channel inside the channel, something like this, inside the channel, and expand itself before actually going down, right? So it is important to understand that these ones are the ones in which they are high probability and they are high risk due to the fact that they could extend there is a possibility of an extension of whatever the market is trying to build here. But the low risk entry is when now the market moves impulsively and breaks the structure, and the market now has confirmed direction, and you decide to enter on the breakage of the structure, right? And this works whether we are talking about reversal patterns like this diagram, or continuation patterns like this diagram, where the market moves impulsively, correct, and impulse is high, where now you enter on the nameable pattern, whether it's a high test or a candlestick retrace pattern or teaser bottom, and you enter at the very bottom here, right, at the third touch or second touch here, which makes it valid. You can enter therefore a high risk entry, but there is a possibility of an extension, or the market could just go down and continue going low, or you could wait for this to play out, for the market to move impulsively, place a pending order above, which makes it a low risk entry, and allow it to move in your direction. So let's move on to the charts so we can see more practical examples of this. On the first example, we're going to be starting with Euro USD, and as you can see, we have a channel here. We have the first touch, second touch. On the third touch, we have a pattern taking place, and we have an extension above that pattern, or rather that trend line. Let's go on the 1 hour chart for further confirmation of what I'm talking about. I believe I have made a couple of videos where I take this example because it's an example in which I have entered, right? So we have the first touch here, not the second touch here, the third touch here. I wouldn't have blamed you if you decided now on the third touch here. As you can see, that's the first touch, second touch. On the third touch, we have a hanging man candlestick pattern right there. Let me just hold on. Yes, there it is. We have this guy over here, right? A hanging man pattern over here. So I wouldn't have blamed you if you entered for a risk entry here for a sell, right? Because it's on the third touch of the larger structure, right? But like I said, the possibility that there's a probability that it could drop right to the low. But the thing is, as you can see, let me just clear this real quick. As you can see, the market extended one more time above the structure to induce your novice traders to buy, right? And on the last push to the high, we see a pattern printing out right there, right? Which makes it an even higher probability setup. Reason being, because it is a wedge. Not only that, it is a wedge on the third touch. Not only that, on inside the wedge, there's 1, 2, 3 touches, and on the third touch, we have another nameable pattern here, right? So maybe your stop loss was somewhere here, and you may be taken out. It's fine as long as you keep your risk management, at a low. It's perfectly fine. But as you can see, you have another opportunity to re-enter here, as this candlestick confirms your entry, and this is a fantastic place for a risk entry. Stop loss just above and your TPs down here. But if you do want to respect the 90% rule, of course you are gonna go the whole 9 yards. And hold on, let's just do this. Just hold on a second. And you're just gonna respect the whole shandies, where you're gonna go all the way down to the low, and you would have banged somewhere between 180 pips and 250 pips, right? So that's the risk entry in which I was talking about. Let's move on to the next entry, or rather let's move on to the next example of a risk entry. For the next example, we are on Aussie USD, and as you can see, we have a structure here that has been built over time. We have the first touch, second touch, third touch. On the third touch, we have a channel going down, as you can see right here, right? And on the third touch, right here on the third touch, this is a high probability setup because it's the third touch, and it is also a third touch of a channel. So it's trends and trends, or patterns and patterns, which is something we're going to talk about later on in the later videos. But again, first touch, second touch, third touch. This makes it a high probability setup and a fantastic trade. Not only that, we have a channel inside, right? First touch, second touch, third touch, and we have a W here. Let's go on the 1 hour chart for you to see the W that I'm talking about. On the 1 hour chart, we see this channel even clearer. As you can see, as we zoom in, we see this channel here. This is the trend line in which we were talking about the third touch, right? And on the third touch of this channel within the channel, we have a first touch, second touch, third touch, and on the third touch we see a W formation here. We see a W formation, first touch, second touch, or a double bottom rather. The first bottom, second bottom, and on the second bottom we have 2 nameable patterns right here, right? The first one is this one, right, which is a low test over here. Let's zoom in for further clarity. Of course, there it is. We have a low test and we have a bullish engulfing, right? So these are the kind of setups in which you have each and every right to enter here. It's either here for a risk entry, or you can enter here for a low risk entry now that the market has now confirmed the W, right, or rather the double bottom with this move. As it impulses high, you place your pending order over here and you enter for a low risk, right? But either way, you're not wrong. This is a high probability setup, and it is of utmost importance to remember that when it comes to high risk entries, they are always ideal. The best high risk entries are the ones in which we have a 3-touch confirmation, we have a structure at hand, and we're at the top of that structure. Otherwise, I wouldn't really bother to enter high risk entries unless we have continuation patterns that are larger, and we will get into examples of that in the next segment. Don't worry about it. But for now, when it comes to reversal patterns, this is how you use the high risk entries for higher profits. You shire here, right as the market confirms. You place your stop losses just below or above, and you ride the momentum all the way to the high. If you entered this one, you would have probably banked, I believe it's supposed to be 90 pips to this trend line, and let's see, 90 pips to the trend line, and you have, let's see, 230 pips to the 90% rule. So yeah, that's how you use your high risk entries. Let's move on to the next segment where we get into the low risk entries. Right, for the low risk entries, we are on Aussie CHF. This is the first example. We come from let's start here. Let's just take this example here. We have a channel, right, which is a reversal pattern. You could have entered for a high risk entry somewhere over there. It's fine. And low risk entry here, it's perfectly fine, right? So the perfect way to enter your low risk entries is just by waiting for these kind of setups to print out, and waiting for your these consolidations or continuation patterns to print out, and placing your pending orders just above right here. As the market prints out this structure, you place your pending orders just above, and as the market moves impulsively, you're already in profits, right? Same thing over here, same thing over here. But I will say that the best ones when it comes to reduce risk, the best entries are the ones in which we have a flat continuation, similar to this one, where it's flat and it's not, it's not really large like this one. This one is a big continuation pattern, but this one is rather flat. It's a small one. You place your pending orders right here. You have a 20 pip stop loss just below. It's a fantastic trade. I mean, 22.90, that's like a 1:3 point something, 1:4, I believe, risk to reward ratio. But also the thing is, with these kind of entries, let's go on the 15-minute chart, right? With these kind of structures or entries, you can also place your high risk entries. Reason being, as you can see with this example, right, we have this pennant, or it's a triangle, whatever you want to call it, but it's still a continuation pattern, right? On the support level of this structure, we have the first touch, the second touch, and the third touch. Now remember, we come from a channel previously, somewhere here, right? Somewhere back here, right? We have a channel over here. Let me draw it, right? We have a channel that goes somewhere, something like this. So we come from a reversal a reversal pattern, which is a a large reversal pattern, right? So right after that we have a continuation pattern. Sorry for that. Hold on. We have a continuation pattern, right? And on the continuation pattern we have the first touch, the second touch, the third touch of the support level of the structure. So there's nothing wrong with entering for a reduced risk here. Absolutely nothing wrong. There's nothing wrong with entering here instead of placing your pending orders above, right? There's nothing wrong with entering down here, but I would suggest, for the sake of safety, wait for that confirmation and wait for that push to the high, so that you're pushed into the market, right? You are already in profit and you have nothing to worry about. Even in the next consolidation, which is a expanding triangle, we have the first touch, the second touch, the third touch, and you can, if you want to, you can enter here. There's absolutely nothing wrong taking a high risk entry here. So there's nothing wrong, right, with taking a risk entry here or taking a low risk entry. Either way, as long as your risk management is on point, that's all that matters. On the next example, we are still on Aussie CHF. We have a double top here where the market reverses, and we have a continuation pattern, a large structure, right, on the 1 hour chart. Let's go on the 1 hour chart real quick, so that we have further clarity, right? On the 1 hour chart we have what looks like a rising wedge, right? We have what looks like a rising wedge, which is a continuation pattern or a reversal pattern, regardless, either way, depending on the market conditions. And even on the 1 hour chart we have a first touch, second touch, third touch, fourth touch, and we have now an impulse to the low. So these are the kind of entries in which you can either way place a reduced risk, place your pending orders down here, right, just below, or you can go on the 15-minute chart and you can take your high risk entries. We have the first touch, we have the second touch, we have the third touch. On the third touch we have a nameable pattern right there, which is a high test, and it's confirmed by this engulfing pattern, which we can take to the low. So there's nothing wrong with taking a reduced there's nothing wrong with taking a high risk entry here, right? Even if we draw this here, check this out. Even if we do this, right, for more confirmation, we have the first touch, second touch, third touch. Not only is it a third touch of this trend line, but it's a third touch of this structure inside the structure. So it's patterns in patterns, right? Even on even here, it's patterns in patterns. Even here, it's patterns in patterns. There's a lot of patterns. Even if you took this one here, first touch, second touch, third touch, reduced high risk entry here, there was nothing wrong there, right? First touch, second touch, third touch, high risk entry, there's nothing wrong, right? Even on this one, but this one is a valid trade. It's not a high probability trade. It's not a it's not a high probability trade. So these are the kind of ones in which you take a low risk entry. It's a flat continuation, but these are the ones in which you can and you are allowed to take a high risk entry, that if you are comfortable. Even on the next structure, hold on, let's clear this. Even on the next structure here, right, we have this guy here. If we draw this like so, right, if you draw this like so, if you took this consolidation with a low risk entry. This gap would have caused you some problems, but either way you were not wrong. But this first touch, hold on, first touch, second touch, third touch, you enter here, there's absolutely nothing wrong, right? So that's the difference in approach when it comes to high risk entries and low risk entries. I believe by now there's some sort of a there's some sort of a light bulb going off. There's some sort of clarity you're experiencing. Feel free to comment down below if there's any questions that you have, anything that you want me to cover, any topics you want me to cover. It's all good. Otherwise, I hope this video has provided you with the necessary value that you may need for your trading career. Otherwise, thank you so much for watching so far. Hit the like button, subscribe, share this with your friends, and stay tuned for the next videos. Peace out.